A Venezuelan economist got scammed trying to sell his own car in Mexico City. He raised $1.6 billion to fix the problem. His company became Latin America's most valuable startup, $8.7 billion in 2021. 4 years later, its valuation had been cut by 75%. It had withdrawn from 4 countries. The company is still operating in Mexico. The founder is still CEO. SoftBank is still on the cap table. The trust deficit it set out to solve is still there. If you're here from the short, this is why SoftBank stayed and why the founder is still CEO. The bigger story is what got the price wrong. The company was Kavak. The founder was Carlos García Ottati, Venezuelan economist, Oxford MBA, a management consultant who moved to Mexico City in the mid-2010s. In Mexico, García Ottati tried to sell his own car. He got scammed. So did most Mexicans selling used cars. In Latin America, approximately 90% of used car transactions are informal. In Mexico specifically, around 40% of deals involve fraud. It was a real problem at large scale. In 2016, García Ottati founded Kavak in Mexico City alongside his sister Lorianne and a third co-founder, Roger Laughlin. Kavak's business model was straightforward. Buy used cars from individuals at fair prices, refurbish them at proprietary reconditioning centers with 240-point mechanical inspections, sell them with a 7-day return guarantee and a 3-month warranty, handle the bureaucratic title transfer, a real value add in Latin American markets, then provide the financing through an in-house lending arm called Kavak Capital. Auto loans at 18 to 30% annual rates, targeting customers who could not access traditional bank credit. The capital came. In September 2020, Series C, $400 million led by SoftBank Vision Fund. Valuation, $1.15 billion, Mexico's first unicorn. In April 2021, Series D, $485 million. Valuation, $4 billion. On September 22, 2021, Series E, $700 million led by SoftBank Vision Fund 2 and General Catalyst. Valuation, $8.7 billion. Latin America's most valuable startup. García Ottati was 38 years old. The Series E came with a commitment. In 2022, García Ottati publicly committed that Kavak would reach profitability by 2023. To get there, the company expanded. Between late 2020 and mid-2022, roughly 18 months, Kavak entered 6 new countries beyond Mexico: Brazil, Argentina, Chile, Colombia, Peru, Turkey. Each new market meant new reconditioning centers, new showroom inventory, new local sales teams, new warehouse credit facilities, and new exposure to local subprime auto lending defaults through Kavak Capital. At peak, the company had approximately 12,000 employees across 7 countries. The unit economics did not close. Kavak's core insight had been right. Latin American used car customers did pay a premium for a trusted, warranted, financed alternative to the informal market. The trust deficit was real. What was wrong was the size of the premium. Customers were willing to pay a few $100s more than the informal market price. Kavak's cost structure, refurbishment plus warehouse capital plus showroom overhead plus customer acquisition plus the international expansion infrastructure, required a premium of thousands. The math did not close. And there was Kavak Capital. The in-house lending arm wasn't just a feature. By 2022, it had become a structural drag on the business. Subprime auto lending in Latin America is high risk by design. Default rates run substantially above US benchmarks. When the loan book grew faster than the economic recovery from the 2020 pandemic, provisioning costs grew with it. Kavak Capital was supposed to be a margin engine. It became a margin liability. In June 2022, Kavak laid off approximately 50 employees at its São Paulo and Rio de Janeiro offices in Brazil, the first major reduction. By late 2022, internal communications reportedly showed Kavak's Mexico sales targets being missed by approximately 80%. The 2023 profitability target was not met. There was no public announcement that the target had moved. In 2023, Kavak exited Argentina entirely. In January 2024, Kavak announced full withdrawal from Peru and Colombia. Markets it had entered just 18 months earlier. The official framing was strategic refocusing. Industry reporting in Bloomberg Linea described the real driver. Cash burn versus growth math no longer worked at scale. Through 2024, Kavak removed its country manager in Mexico and at least 4 other senior Mexican executives. The home market was contracting along with the international footprint. The Kavak Capital lending book continued to absorb subprime default provisioning at rates above the company's original modeling. The trust deficit was still there. The thesis was still right. The price customers would pay had not changed. On March 2025, Kavak closed a new financing round. $127 million in equity, $200 million in credit lines from Goldman Sachs and HSBC. The equity round was co-led by SoftBank and General Atlantic, the same investors who had funded the company at $8.7 billion in 2021. The new valuation, approximately $2.2 billion, a 75% cut from peak, $6.5 billion in implied valuation, erased. The Bloomberg headline framed it cleanly. Mexico car dealer Kavak's valuation slashed by $6.5 billion. Kavak was no longer Latin America's most valuable startup. It was no longer Mexico's most valuable startup. It was a regular post-bubble unit economics workshop. The cumulative outcome: approximately $1.7 billion in equity raised across 4 years, approximately $6.5 billion in implied investor valuation destroyed, geographic expansion from 1 country to 7, then contraction back to 4, Mexico, Brazil, Chile, Turkey at reduced scale. Peak workforce 12,000, materially reduced through layoffs. Mexico now generates approximately 60% of remaining revenue. The 2023 profitability target remains unmet. The CEO, who had committed to profitability in 2022, is still the CEO. Carlos García Ottati did not step down. SoftBank did not write off the position. They led the down round. This is the SoftBank pattern. Vision Fund 2 has multiple Latin American positions with the same structural shape. Geography plus consumer technology, ambitious initial pricing, unit economics that did not compound at the multiple investors had paid for. Kavak is the most visible of these, but not the only one. The Vision Fund 2. Latin American portfolio has been a documented underperformer through the entire cycle. The lending book at Kavak Capital continues to operate. Mexico continues to grow, just not at the multiple investors had paid for. Latin America had a real used car problem. Kavak identified it correctly. They built the platform. They raised $1.6 billion. They expanded to 7 countries. Then they discovered that the price customers were willing to pay for a trustworthy used car was smaller than the price SoftBank was willing to pay for the company that sold them. The trust deficit is still there. The math hasn't changed.